coming. Our next guest has been a longtime bull of Tesla, and even he says he's a little disappointed in the results. Let's bring in Hatem Dhiab. He's a managing partner at Gerber Kawasaki. Hatem, thanks so much for being with us. You're disappointed. Shareholders are disappointed. Let's remember what we're disappointed in. Margins for autos, excluding credits, at 19%. Investors were hoping for something a little north of 20%. To perhaps the uninformed, that doesn't seem like a big deal. Tell us why it's a big deal.
Thank you for having me, Amber, and good morning. It's a big deal because Tesla was getting this really awesome valuation compared to any other car company because they had these really extraordinary margins. And now we're going through this price war whereby Elon and the Tesla team is discounting their cars, sacrificing margins because they're trying to gain more market share. So I think longer term, this is a good strategy for them to own more market share. But short term, the sacrifice in the margin is really hurting the investor expectation.
So let's focus on that. Short term, it's hurting the company, but Musk and Tesla seems to think it's worth it in the long term because you just got to get these people in the cars and then you can drive, pardon the pun, long-term revenue. Then you've got them in your ecosystem and everything else Tesla wants to build on top of their cars grows from there.
Yeah, I don't think anybody is used to this dynamic pricing for cars. Elon basically cut the price 6 times this year alone, right? And investors really want certainty. They want to understand that Tesla is going to continue to make money. They are making money. They have they made over $20 billion in profits. But the reality is, if you keep reducing your margin, cutting your margins like he's doing. And if you say in a conference call that you're able to sell cars at zero margins because you just want to sell cars, then that just creates a lot of uncertainty and frankly confusion around the future strategy of Tesla.
And so I guess my question is, should we be confused because Musk has always wanted to make an accessible car, a car that is not just at the high end. Right now, the average selling price of a Tesla with all these price cuts is around $47,000 US. So he's working towards that goal. Should we really be surprised? Because he's been saying it for years. That's what he wants.
100%. And I think investors should look at the long term, right? Tesla's ultimate goal is really to go fully electric, to transform the whole car fleet, the $90 million or so cars that we sell in the world every year into electric cars. And the only way to do that is to get cars below $30,000. And I think Tesla, what it's trying to do is trying to create the battery technology to be able to do that, right? And if that means sacrificing their higher end cars or their high end prices in the short term, that's really what they're willing to do to get there.
And I feel like we should mention, revenue was up double digits, 24%, deliveries up 36%. So it's not like a business that is being hurt, I guess, on the top line. But on that point of margins, is price the only way that they can affect that? Or can they become more efficient? Can they deal with their costs in a better way? I note that lithium prices, for example, a key input in these battery operated cars, are down in a major way.
Yeah. And very good question. I think Tesla has a lot of levers, right? So cost is really, first of all, 30% of the cost of an EV is really the battery. So lithium spot prices were $86,000 last year. They're $26,000 today. Those prices coming down because of supply being available is going to reduce the cost. But also, ultimately, what Tesla is doing is they are really have some of the best manufacturing processes in the business. For example, the 4680 battery, which is starting to ramp, is supposedly going to cut the cost of the batteries by about 30%. So when that happens, you can see that margins will come back. So ultimately, I think what Tesla is trying to do is they're trying to play with the price right now, knowing that down the road, cost of materials is going to go down. Their manufacturing process will allow for lower cost as well. So they really are going to become more profitable because they're able to control those costs and bring them down at a factor of 2 or 3.
I want to just bring in one analyst's concern about what they're doing on the price side. This is an analyst from RBC who is worried about customers holding out for lower prices, and then you get into a cycle where the consumer is trained to wait for incentives. Are you worried that this becomes a problem for Tesla?
100%. I mean, this is it's a conversation that I had yesterday with someone who bought a Tesla 6 weeks ago. The car cost $4,000 less than he bought it for. So I think you're going to anger a lot of customers. People are going to hold off on buying cars if they think that the prices are going to go down. And this is why I said there's a confusion around this pricing strategy. Usually when you're discounting, you say, hey, listen, I'm going to discount this car for X dollars for X amount of time so people can come in and buy the car. So I think we need to have more clarity on how they're going to discount it and how much.
What's the bottom line for you? You're a longtime shareholder of Tesla. You've liked the stock, but it sounds like, and throughout our conversations the past couple of months, you're not without frustration. What would it take for you to sell down your position, to throw in the towel on Tesla?
Well, it's important to understand that we've been in Tesla for 10 years, and we've gone through a lot of ups and downs with Elon Musk. Tesla is nowhere close to what he was, 3 or 4 years ago, where they were going to go bankrupt. I think they own the car market. They are the leaders in this space. They are growing. They'll probably do 2 million cars or 1.8 million cars this year. I think this conversation about pricing and margins are very, very short-term thinking. Longer term, they are the leader in EVs, in batteries, in software, in services. I think once you drive or own a Tesla, it's really tough for you to own any other car. So I think investors have to really look at the long-term picture and understand that the TAM, or the total addressable market for EVs, is 90 million cars, and Tesla only sells 2. So that is the upside potential is massive.